The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Got a special announcement, folks. Next week on Thursday at 9:30, we're going to have a very special guest, Dennis Gartman of the Gartman Letter. He's on the regular on CNBC all the time. I've known Dennis for many, many years. I called him this morning, and believe it or not, he remembered who I was. He didn't remember that he owed me $50. No, that was a joke. Anyway, let's take a look here at this DAX. As you can see here, we were up in the sell zone early this morning. I don't know what happened after that point, but we're having some really good action just about everywhere. And let's take a quick look here at this gold market, folks, because I think this is one that's going to be, please don't tell me that's not what's happening. Oh dear, I guess I'm off the air. Oh dear, what's happened? Ah, shucks. What did I do wrong now? Holy moly, guacamole. Oh dear. I don't understand. I'm on Skype, so I guess I got to be in the show, but I don't have a connection to TFNN. I'm sorry, folks. I don't know how to put the charts in or anything. So we'll wait to here. We're going to be up here in just a minute. Hopefully, we'll be here in just a second here. Get back in here and see if we're back in. I think we're okay now. 10-4. Can everybody hear me okay? Was I out during that time or not? Or does anybody care? Okay. Anyway, Dennis Gartman will be my guest next Thursday at 9:30. So we'll see. Good. All right. Let's take a look here. I wanted to show you that was the DAX, and the next one was the FTSE, of course. But the one that I think is very, very important to look at, of course, is the what's happening with the euro, and that's the main thing. Let's just take a quick look here, folks. This is a chart, a monthly chart of the euro. Let's just get this up so we can take a look at it, and then we'll bring this up. There we go. Okay, there you look at that and you say, gee, what the heck is that? There's not much there. Now, if we just go just one step farther, and take a look at it on a monthly basis by watching what's happening, with the technical pattern. Let's just do one at a time here. Hold on. I'm trying to build a what do you call it? A reasoning for why things are doing what they're doing. So if you'll bear with me 1 second, I got a little confused when I lost the contact, and I'm trying to find everything that I'm looking for, and I'm not able to find it all. So, oh dear, I think this is it right here. There we go. Here's what I want to show you. That was the chart without the lines. Now we're going to put the lines on the monthly chart, and you can see what's happened here back at the 125 level in the euro. We hit that 61% retracement of the high from 2013, and we hit the 382 retracement from the high in 2007. And you can see what's happened now. We're trading around 116 this morning. What we're going to do now is we're going to show you what this looks like as we go to smaller time frames, and we can see this. So if we go down to the next chart that we want to see, which would be the weekly chart for the let's do, well, shucks, I'm just getting a little confused here, Larry, doggone it. Okay, here's the one I want. Here's the weekly chart, and this is the one that I want to show you what's happening. Hold on just a second. Thanks, Duffy. Anyway, look what's happened here with the dollar index. We went right up to that 382 retracement, and we backed off just a little bit. I want you to go to the far left to back in 2014 in that little red box over there around September, October. That's the same type of pattern, folks. And look what happened to that dollar index after that. That's what we're looking at right now. This is really very, very unusual. And when you stop and think what the U.S. dollar index did yesterday, just take a quick look at this. Hold on a second. As soon as I can get it up here and we can see it all together, you're going to see that we're looking at something that could be just incredibly, boy, what's happening to my charts? I just don't wow, that's not good. That's not good. Ah, shucks. Here it is. Hold on just a second. When I lost contact, I lost these darn charts. I think gold's gone to 1288, folks. It really does look like it. I posted the chart of the relationship between gold and the euro just a few minutes ago, and that was a tip-off yesterday. Plus, we had the double top in silver. But look at the chart on the dollar index yesterday, folks. We hit a 61% retracement from the low in May. We'd been down for several weeks. Look at the strength of that dollar. Shut the front door and raise the rent. I mean, that's telling you it wants to go higher. I mean, that's a flat-out no-brainer, and that's what we're seeing on that weekly chart, and we're also seeing it on the monthly chart. So we're looking at a dollar that is getting ready to really go. Now, why is it going to happen with trade wars and all this other stuff? I don't know, but somebody's in there buying that U.S. dollar with both hands. So don't fight that one. That's a really big one. Now, we're getting the grains are just getting absolutely massacred because the funds have, they've been dumping and dumping and dumping, and now with the increased trade fairs or whatever it is that they're doing, they're pushing the things lower and lower and lower. And I wanted to bring that to your attention here, folks. I wouldn't buy it yet, that gold. I'd wait to 1288. But look, we had an absolute beautiful pattern here in the soybean meal here on Tuesday, and of course on Wednesday they came out with the news, and boom, we're dropping another $14 in meal. I don't know where the bottom is in this, and I don't think anybody else does either, because emotionalism in these grain markets is getting really, really high, and that's probably getting close to a bottom. That's my guess, because I've had 2 phone calls today for people say, can I buy beans here? Can I buy corn here? And this is a Friday in a down week. Yeah, maybe they open higher, but even if they do, the longs are scared to death now, so there's not going to be a straight up move from here, I don't believe, even though they're expecting, incredibly hot weather coming back in again. It's all about tariffs and stuff like this. You'll be able to see. You're right, Duffy, that will hurt the farm belt, and that means that the votes for Mr. Trump won't be there. Well, you wouldn't think they would be, but you never know. But that's going to be a negative. So we'll see, what's going to be happening, with that. There's a lot of action, folks. If you remember, one of the things that we talked about was the fact that we had this Gartley pattern in the Dow Jones Industrial Average coming into this week, and we've been down every day this week. We went right up to that 61% retracement at 25,300, and we're below 25,000 this morning in the futures, I believe. I'm not sure. I haven't checked them, but that's what's happening. Of course, we made a new high in the NASDAQ yesterday, and but that's totally different. That's a different market, because it's only 20 of those big stocks that's able to really do that. So we want to keep an eye on those too. But we're going to have some great volatility here. That's the really good news, is this is the kind of stuff that you really like to see. We want to talk a little bit more about the gold and silver when we come back. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I posted the chart of the silver. I've also posted the chart of the gold with the euro, showing the relationship that's there. Gold has, been under some pressure here this morning. We're down now $17 from the high. That's one half of a harmonic number down here at 1291. So that should hold it, because if that doesn't hold it, then we could be looking at even a more serious break. Remember, there's still an outstanding target down there in gold on that long-term chart, which would be down around that 1220 level if that would be the case. Now, we made a double top in silver yesterday from April. The April high was 1736. The high yesterday was 1735. We're now 25 cents under that. So, that's been a pretty good sell-off. But if we turn and get above that, that would be very, very bullish. So 1291 should be some support here in the gold is what I would suspect. But there's one that looks really interesting from the short side, folks. I'd like to share it with you. It fits in with what's going on in the world, too, I believe. And that is the 30-year Treasury bond. Now, we're into the September contract here now. So sort of pay attention to it, because up at this level here, 144.15, you're going to be making a 61% retracement of the high that we made back on the 29th of May. So that would be your first Gartley ABCD pattern coming back. And Gartley said in his book, sell that first ABCD pattern in a new bear market. Now, I don't know if this is an old bear market. We just had a little bit of a dead cat bounce, but this would be the spot where you wouldn't have to risk too much. And with the stocks getting hit very hard this morning, they could push these bonds up to that and even higher. Because remember, we got to 140, we got to 147 in the June bond, so we could certainly get back there again, possibly, with the September. But I will mention this: the open interest is not very positive for the stock indices nor the bonds. Yesterday in the stock indices, all of them dropped, with the exception of the NASDAQ, which up very marginally, less than, I think it was 800 contracts out of 238,000 open interest. The open interest only increased by 800 contracts, going into, new high ground very easily and closing there. Folks, that's not bullish. That there's no new buyers coming into the market. I've been suggesting that for quite some time, and we hit that Gartley pattern in the Dow Jones Industrials. We also hit it with the New York Stock Exchange Index pretty much spot on. So this is a pretty serious sell signal. It looks like, in the stock market. That's the way it looks like. It's been masked very well by the crazies, the Nasdaq 100s and stuff, the Netflixes and all the others, and Facebook and all of them. But even those haven't broken the patterns that I talked about on Monday when I looked at those popular stocks. The only one that went up a little bit higher and then turned down was Netflix. It went up another $6. Let me show you what I think is an absolute perfect technical picture here. This is one that's in the news almost all the time. This is Tesla, and I just want you to see what's happened. Yesterday, right on the close, the market went up to make a 78% retracement at 358.50. That was the exact number, and it closed at 357.75. It's trading $3 or $4 lower this morning, but it had all the necessary things to make it a very nice pattern. You have an ABCD structure, as you can see, that measures up to that level. You've got that 78% level from the high. So it's really set up to turn down. The good part is that if you're going to short Tesla in here, you don't have to risk very much. 1% on this would be, very, very small amount. You'd be talking about $3.50. So, that would be a, very, very small risk. And it has a potential just to go down to fill that gap would be down around, be 23 points lower. So that'd be a 7-to-1 risk reward ratio just based on that. The Stan Harley low, Bill, comes in on the 19th. The 19th was the day. I keep a record of that because he's done such a good job. That'll be next Tuesday, as when Stan's low is due to come in the stock market. So we'll see if that's going to be the case. I don't know, but that's what he was forecasting. In fact, we might have Stan on next week on Tuesday, because that is a good spot. And I mentioned that we are going to have Dennis Gartman on Thursday. He'll be a new guest for us, but he's pretty famous, so we're pretty lucky to have him. I wanted to mention another one that is really interesting here from a technical basis here, folks, and this is this U.S. the banking index. Just get this up here so that we can take a look at it. You can see here this past week we went up to a 78% retracement level, and then every day this week, of course, you see we've been down. We got notice today from our good friend over in Las Vegas that Deutsche Bank from the UK, from Germany, is also under pressure again. It's trading under $11 again, and it looks like Lehman Brothers all over again, or Bear Stearns. They're not going to let Deutsche Bank go under. I feel pretty strongly about that, but I feel, sometimes my feelings aren't as good as I would think they would be. But anyway, I don't think they're going to let that bank go under because it's a flagship of the Deutschland. So I doubt very seriously if they'll do that. I wouldn't like to. Anyway, I'm not going to get talking about that because that makes it a little different. I wanted to share this one here with you. With all this stuff about tariffs and everything going on, look what's happening to the hog market, folks. This is the one that should be getting absolutely massacred by these tariffs and stuff. But you can see July hogs have been in a really strong uptrend, and they continued it even yesterday, even though the corn is down 70 cents a bushel from the high. Beans are down $1.50 a bushel, folks. On Memorial Day, when it was 97 in Indianapolis, Indiana, for the Indianapolis 500-mile race, they were looking at possible $2 higher beans coming in with a big run because of the drought that was coming. And of course, a little bit of rain hit it over the weekend. And we came in Monday morning, both barrels blazing to the downside. And we've dropped $1.50, folks. So this has been a heck of a move down, and we're down another 22 cents today in beans and still dropping. So I don't see any spot here. I see a spot to buy December corn, but even then I don't even want to do that because I'd rather wait till, over the weekend, because more news might come out, and there's no really way to quantify your risk over the weekend. So I would rather wait to see it Sunday night to see what it's going to do. So those are the ones that I think we should be watching very, very closely. I want to check the price here, a couple things here to see if the gold has held that 1290 level. so far. We'll see if it's going to be okay or not. Regarding the euro, folks, we're up about 80 pips from the bottom. Actually, we hit 90 pips up from the bottom, and the 382 retracement on this move from the move down. Remember, we dropped 300 pips, folks, in the euro. 300 pips, and the number to watch in the euro is 40 pips higher, 116.58. Watch that number very, very closely, because that's a 382 retracement, and if that's the case, it's not going to go much higher than that. And believe me, with that big move down, they have scared the bejeebies out of the longs, and there was a reason for that. My goodness, I forgot to show you something on that chart that was very, very interesting that I wanted to bring to your attention, and I hope this is it. Again, let's just show you. I'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to put this chart up of the euro on the weekly basis. This is one that we focused on this past week at the newsletter, but you'll notice if you go to that top up there in 2018, you'll see that rally back where that little dark line is that takes you up to that 124.80. We completed the same type of a pattern yesterday. You'll notice that we were looking for a 3-week rally at the 382, which came in at the 119 level. The high yesterday was 118.60, and then of course we went down and took out the they went down to 115.20. So this market is really poised to go a whole lot lower. That's what it looks like, as we can see from the monthly chart and also from the daily chart. It's telling us pretty much the same thing. So whether that's going to continue that way or not, I'm not sure, but we need to keep an eye on it. Now, I've asked to take a look here at Bitcoin. I will bring it up here to show it to you. This is a chart from our good friend across the pond who actually owns some Bitcoin from 2011. He bought $100 worth. I'm almost afraid to tell you how much that's worth now, but you can see here that, and he still owns it. He didn't sell it when it got to 19,000. And it's still worth a lot. Anyway, we're trading it just a little below 6,500. The ABCD structure pattern on this, folks, takes you down to $4,000 a share. Now, you don't see that on this particular chart, but if you were to take a look at it from a logarithmic scale, you'll see here, you'll be able to see the ABCD pattern very easily if you'll look to the far right up at the top there. I didn't draw it in, because you'll be able to see it. You can see the ABCD structure that will come in right around that $4,000 level is where it comes in at. Just, I think, spot on 3,900 or 4,000. So that's pretty much, you know, what you're looking at here. And that would be equal almost to what we did during the time between July of 2014 and July of 2015. So those would be equal too. So I don't think cryptocurrencies are dead. It's just doing its normal thing. And it's just really, yeah, you're right. Some of those stocks do look like the dot-com bubble types. I remember Global Crossing because the guy that started Global Crossing was one of the lieutenants for Mike Milken, and I always had my doubts about that outfit, and of course turned out to be a total scam, but that's neither here nor there. Anyway, let's move on to a couple other things that people have asked questions about, and one of them, of course, was been the Australian dollar last week. We had a really nice sell pattern come up in the Australian dollar. We were in a downtrend, and we had a nice ABCD pattern, and it backed off, you know, below the 75 level. And now we're down into some pretty strong support here in the Australian dollar to see what's going on. Folks, I've had several questions this morning about the trade wars and all that stuff. I've never been involved with them. I mean, I look at the charts. That's basically, you know, what I'm watching here. I don't know anything more than anybody else. If I were to ask anyone, it would be, you know, Rich Anderson or possibly Cy Monley. And Cy doesn't, you know, he doesn't know anything what's going on in the grains, except that, you know, there's some people that are certainly panicking, but those that sold their crops, they're in pretty good shape. So that's why they have hedging, and that's why it's what it's there for. I wanted to bring one other, the biggest held stock in the whole world, and that is Apple. I want to let you see, this is over the last 6 months, we made a 3-drive to a top pattern. The thing that's important is you'll see those 1.1414 expansions. That's the reciprocal of the square root of 2. And that is a 3-drive to a top pattern. You'll notice that it has not exceeded the highs of early June as of yet. We still made a high up there at that 193.44. And the high was, I believe, 194.10 or something like that. So that has not gone crazy to the upside like some of these others. The only one that went nuts of those big 6 that I look at was Netflix, and that went another $6 or $7 before it broke $12. So that's primarily what we're looking at. I don't use Tesla in the group. I did the chart on Tesla because someone asked me to take a look at it. The fact that it was right up to that 78% level, and it was interesting. It was trading around 355 just right before the close, and then all of a sudden it jumped $3 right on the close to get up to 358.40, which was that 78% level that we posted earlier. So all of that's telling us that we're probably pretty close to a major top here in Tesla, along with some of these others that we're looking at. Now, give me a second here. I want to double check to see what's happening in the markets here, to see if we should hold these levels And the reason why I'm saying that, because when the market's open sharply lower and you're in a bull market, you have a tendency to market to rally. I mean, how much it's going to rally, I'm not sure, but we could still, certainly do that. So let's just remember, these markets don't go straight down. They do go straight up, but they don't go straight down. But we'll see if that's the case. The one that has my interest the most this morning, folks, is that Treasury bond up at that. We're trading at 144.05 so far this morning, 02 last. But if we get up at that 144.12 in that September bond, boy, that's a flat out Gartley screaming sale is what that looks like. Whether that'll be the case or not, I don't know. Someone's asking me about the euro, folks. All I'm saying in the euro is we dropped from 118.60 down to 115.20. The 382 retracement back on that comes in at 116.58, and we're trading at 116.14. So it's got another 44 pips to go in order to get to that level. Yeah, it might turn down from here, but I don't know that. All I've got to go on are those numbers, and when they hit, I try to follow them. That's basically what I'm trying to do. Sometimes they work, but when they have a trade war like this, I mean, it throws everything out of whack. I mean, nobody wants to. I mean, the hedge funds don't want to buy, and farmers have already sold out. Who are you going to get to buy? The small speculator? I think not. So we'll see. We're breaking below that 1291. We're at 1288 and change now. This is not good for gold, folks. I really believe we got a shot here to get gold down near to that 1220 level, maybe 1260 to 1220 level. With that double top in silver yesterday, gosh, that was screaming in gold that you had to, you just had to be, very, very careful. And that was one of the things that I thought would have been extremely important to do because of the fact that, it was acting so poorly as it related to the silver market, and that was the wrong thing. If we take a look here at the copper that we did earlier in the week, remember on Friday we mentioned that we were making a major double top here in copper. But if it could get above that $3.31 a pound level, which was the old high that we made back in December, it had enough strength to get it moving really fast because it went straight up, stopped spot on to that old high at $3.31 a pound, and now we're trading below $3.20. So that's telling you that is a potential for a very strong double top. Okay, we'll take a little break here. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. I posted the chart of that Treasury bond trade that we were talking about. You'll see that that's a 61% retracement back. That should stop it, but, that's going to be up quite a bit. So be careful. You don't want to fade those really strong prices. So you might want to put a stop in, because if you're wrong, you want to be out of the way right away. That's the main thing to really take a look at. So we'll see if it's going to be the case here. Let's take a look at the longer term picture. You're right. You're right. If that gold gets below that 1280, it's going to be really nasty, because it's going to set up a 1220 to 1200 target, which is the one that we've been waiting for a long time. The fact that it couldn't move yesterday, all it could do was get up to 1313 in the gold, taking out the old high by less than $1 when silver's making a double top from April. Hello. Anybody ever read a tape would figure out something's not right with that picture. And then when you looked at the situation and what was going on, with the euro and gold, and this is when gold was, you can see, well, you don't see the price here in gold, but this one, gold was trading at 1306 when I sent this out, warning people that this is not the time to be, buying gold. It's the time to be out of the gold if you're out. That's the key here, because it was certainly telling you that it wanted to, it looked like it wanted to go higher. That was the reading from the cheap seat. So whether that's going to be happening again today, I'm not sure, but it certainly has all the earmarks of a market that wants to go lower. And as you know, we've seen this on a longer term basis, and I hope I have a longer term chart. Yeah, I've got one up here. I just want to show you what will happen if we break that 1280 level in the gold. You're going to be looking at some real serious move to the downside that will take us down to there's the 1265 would be the 78% retracement, but the 12,000 wow, Larry, $1,220 an ounce would make you right at the 61% retracement from the low going back to way in January. But what's wrong about this chart is the fact that we're going to be looking at a market that made a bottom in May and could not rally. And if you notice there in the bottom of this chart, it says the big concern I have is why gold has not exploded from the cycle low like it did in July and December. And if you look at those lows way back in December and the other one that came in December, those were very, very powerful moves. And you can see they went up like a rocket. This is hardly a rocket ship. This is more like, me sitting in my rocker doing my knitting. But anyway, we'll see if it's going to be the thing, because we could easily break down to $19.10 in the silver and 1,220, which is the 61% retracement of this whole $280 move from the $300 move from the bottom. So that's going to be an important one to watch if we get to that level. So that's what I see. Whether that's going to be the case or not, I'm not sure. Now, if we take a quick look at crude oil here, I believe yesterday we went right up to that level to be a seller, which was up around that 167. The high was 167.10. I believe we might get to 167.20 for a short period of time, but I don't believe we'll be going much above that. But if we do get above 68.50, which would be the 78% of that whole move down, if we get above that level, which would be 68.70, that would say the market is probably turning to be a little bit more friendly. But anyway, this is what it looks like right now as we're heading down in the crude oil. And I'm just waiting to see the next leg to start to the downside. And then I would be looking for a low risk short to see if it moves in that direction for sure. Now, I had a question here about one of the stocks that we talked about yesterday, and that is Microsoft. And if you'll see taking a look at Microsoft, you can see here that we had a beautiful double ABCD patterns up there at that 102 and change level. That was the high, was just a little under 103. So it's doing exactly what it's supposed to be doing technically, but it still troubles me that that they have you carry the value of the stock around to let you know what that price is. And what I'm meaning is someone gives me the price of Microsoft to talk about it as often as possible. Well, I'm not doing any advertising for anybody, but if people are asking me to do that, the question that comes to my mind is, I wonder why. They probably don't have any skin in the game, would be my guess. So if a person doesn't have any skin in the game, give them a lot less time than a person who does, because that's what it's all about, folks. It's putting your cards on the table, putting your pennies and nickels on the ground and letting it go to see if it'll work, because you don't know which ones are going to work and you don't know which ones are not going to work. So you've got to do a whole bunch of them, and the ones that work, you're going to feel very good about. And the ones that don't work, you should feel good about too, because you should always learn from your mistakes. If you make a mistake, remember what Roy Longstreet said: the first mistake teaches, the second mistake kills. So let the market teach you something. If you didn't put a stop in, it's trying to teach you that you have to learn to do that. If you've got a really bad headache or you're not feeling good, that's the worst time in the world to do any trading, because you're going to trade from a vengeance standpoint, and that's really the wrong way to do. So if you're overtired, just rest. Don't try to trade, because you'll just you'll make abstract errors, and then you're looking at something really yucky, and you don't want to be looking at something really lucky. That's it. And, David, I know you said the market owes you something. The market doesn't owe you anything. You owe it to yourself, David. All the market was the vehicle to get there. That's the key. It was the vehicle to get you to that point. So if you got the manager's number on that little thing, that little corkscrew thing, then you've got a better chance of getting things done correctly. But that's the main thing to watch for sure. Okay, another question we had about one of the futures from last week, and I'll get it up here to take a look at it. And that, of course, is the live cattle market. And you'll notice here that we were looking for the live cattle to hold this 102 level. I believe we've held it so far. We did make a little bit higher high on Monday, then we rolled over a little bit. Whether it has anything to do with the tariffs and stuff, I'm not actually sure of. So I really don't know. Let's see, the NASDAQ's rallied about 20 points. The Dow's held the 78% level. So there's really no panic going on any of these things right now to really to make any sense of them, because it didn't panic on the downside except for in the grains. So we'll see whether this is going to be the same thing happening in our market. But I believe that we're very close to a really major top here in the NASDAQ and the Russell. The Russell is another one that looks extremely negative from a chart standpoint. Let's get it up here so that we can take a quick look at it. And I believe it's this one right here. And you'll be able to see it because it is right up there again at that 166, 67 level. So that's it. We'll be right back. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and the highlight to two things. If you get a chance to listen to Basil Chapman's presentation yesterday about what to look for the second half of the year, that's really worth it, folks. If you get a chance, try to listen to that program. That it is really very good. Also, I wanted to mention that I will have Dennis Gartman as our guest here next Thursday. The important charts this week, I believe, of course, has been that euro has been a big move, and then also the Dow Jones Industrial Average making a perfect 61% retracement, and the New York Stock Exchange Index also lagging badly. Remember, it's only been a few stocks in that NASDAQ that's making these things go crazy. It's about 6 or 8 stocks that they can push them up, you know, the Googles, the Apples, the Amazons, but the rest of the stocks are not doing anywhere near that well. So I'm expecting to see a lower market next week, but we'll see whether that'll happen or not. But we're going to see some great volatility in some of these things, and especially the grains. When you can get an 80-cent break in corn over a 2-week period and $1.50 in beans, that scared some people. And the people are going to have to eat anyway, so it's just a matter of, you know, waiting to see when the market does does bottom. If you're going to buy anything, look to buy the wheat, because bread is always very, very popular, and there's a very, very big number down there right below that 5.30 a bushel level in the wheat. But for God's sakes, use a stop, because anything can happen, as Mark Douglas used to say, and it usually does. So just be careful. It's all about money management, folks. It's not the trades that you think are going to make you a lot of money. It's the trades that you lose less on, because you've got to trade in order to make money, but you're going to lose sometimes. So you've got to be able to protect yourself as you do this and go along, your merry way. So that's what we're watching. So live every day in an attitude of gratitude. Have a wonderful weekend, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
This is TFNN, the Tiger Financial News Network. TFNN Headline News Update. Here's Tom O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN headquarters in Clearwater, Florida, 10 a.m. Eastern time on Friday, 30 minutes into the trading day. And quite a market we have. All the major indices currently in the red, down between about 0.4 and 0.5%. Dow Jones down 0.5%, trading down 135 points, just above 25,000. We'll call it 25,039. S&P's currently negative by about 10 points. Trading at 27.73, and the NASDAQ off by 30 points in the negative territory, trading 77.28. Russell 2000 down the most, almost 0.2%, down 10 points, trading at 16.74. Start things off, let's jump over to the VIX this morning as we see a little bit of negative market action. VIX seeing a slight rise, but still very low in history, 1282 on that VIX. Let's jump over to the Nadex platform, check in on some of the futures markets as we start off Friday trading. So NASDAQ 100, we're getting a little bit of a bid off the lows that we approached just after the opening bell. When I say a little bit, I'm talking about only 10 NASDAQ points off the low. Currently trading 72.64. NASDAQ making new highs yesterday. S&P 500 just kind of been hanging at these levels since about 4 a.m. Eastern time. Currently trading 27.75 in the S&Ps, looking at the September futures contract. Dow 30, pretty similar story, pretty much right where we were as of 4 a.m. Eastern time in the Dow, currently trading 25,040. Crude oil now trading below $66. Just about 7:30 in the morning, you're talking about 2.5 hours ago, we were up there at $67 almost. So crude dropping $1 in the last 2.5 hours. Gold contract accelerating to the downside. We were just at almost 13.05 early in the session. Realistically, 8 a.m. we're at 13.02. We're now down about $15. Talk about a Friday in gold. We had some huge currency action yesterday. Volatility with the ECB. You had Bank of Japan today. Gold taking a hit, 1287.78 in that gold contract. And Euro US dollar back under 116. Now this is going all the way to yesterday morning when we had that huge acceleration to the downside for the euro. Some big time dollar strength, which really factored into the dollar index strength being the euro weakness. Euro dollar 115.98. We'll see where that goes. Stay tuned. We got a treat. I'm going to be coming back here with Mr. Basil Chapman for the 10 o'clock hour. Then, of course, we got swim lessons. Basil's got his own program, Tiger Technicians Hour at noon. Of course, Steve Rhodes, Dave White, and I think I might be back this afternoon as Tom is traveling today. Should be an exciting day in the markets. Come on back, folks. Have a great Friday.